What's up, guys? It's Rob here. And today, a lot of people are making a big mistake in the markets. A lot of people are selling their stocks. They're getting very fearful because of some stories that just came out, and stocks are moving down in a pretty significant way, especially smaller market cap growth stocks. Those are moving down the most. We're going to talk about what is moving these stocks down and why I think it's a really big mistake that people are selling based off of this news, okay? The Fed has said that they are going to start reducing their balance sheet as soon as May, and will be doing so at a rapid pace. And they indicated that interest rate hikes could come at a more aggressive pace than the average 0.25% increases that we've come to expect. Now, I think this is a big mistake, right? I think that selling based on this news is not what I would be doing, right? You can see a chart of the S&P over the past couple of days as these fears have been setting in. We've been moving down, and specifically today, we've been moving down, especially more growth-based stocks. Those have been getting hit the hardest, right? The QQQ has been getting hit pretty darn hard, and stocks like Sundial are moving down pretty dramatically. A lot of stocks are down in big ways if you take a look at this watch list over here. So stocks are moving down on this news, and I think that selling on this news is probably a mistake, and for a couple of reasons. One, the Fed, yes, sure, they're going to start raising interest rates. We've known this for a while. They're doing it to combat inflation. We're going to look at how interest rates haven't actually been too detrimental for the stock market in the past, and we'll cover that, yeah. But a second thing that we do want to talk about first is about just how much money is in the system now compared to how much there was 2 years ago. In fact, if you guys have been longtime viewers of the channel, you've surely seen this before, but 80% of all US dollars in existence were printed in the last 22 months. Now this is a couple months old, so maybe 26 months, but still, a ton of money was printed and handed out to the American people during the pandemic in the form of stimulus checks, in the form of unemployment, in the form of payable, non-payable back loans, right? Loans that did not need to be repaid. And a lot of people have a lot more cash than they once had. That's leading to, obviously, higher inflation rates, which the Fed is trying to combat by raising interest rates and by shrinking their balance sheet. But I don't think that it's going to be enough what they're doing to stop all of the inflation that we're going to be seeing in real life, in addition to the inflation that we have already seen some of and are likely to see more of in the stock market, right? We're going to look at the stock market and what it's done over the past while, and what we've seen with interest rates over the past while as well, right? These are interest rates that have been tracked since about 1955, and you can see that right around here where we are, they're at pretty much zero, right? Even though we have had one rate hike in March, they're pretty much nothing compared to what we've typically seen over the course of U.S. history, right? They're pretty darn low right now. And you can also see the average gains of the S&P year by year, right? Percentage point gains for the S&P year by year. And this is also going since 1930, so maybe we'll trim it down a little bit to 1955 when we've got that interest rate chart. And you can see that despite the fact that interest rates were far higher, many multitudes higher than they currently are, we also tended to see pretty good stock gains in the past as well. I mean, 45% in 1954, 31% 1975, and even if you look at these interest rates during the 80s, they were incredibly high, upwards of 15% at times in the early 80s. You can see that we also in the 80s tended to see decent years in the stock market, right? Up in 1980, 25%, 14% in 81, or sorry, in 82, 17% in 1983, in 1985, up 26%. And the years that we've been seeing in the S&P are nothing out of the ordinary, right? We've been seeing pretty good times, but this is nothing out of the usual for the S&P, right? The S&P tends to perform pretty well, and tends to perform pretty well regardless, apparently, of what these interest rates are. So over the short term, I think this kind of stuff tends to make people very fearful. It tends to make people sell stocks. Some people look at this and say, oh man, the Fed is going to come in and mess up the market by raising interest rates. Well, if you actually look at the most recent rate hike that they did, you can see it right here. And it's this little blip upwards that we saw in March when they raised rates, right? So this is their first rate hike. And, sure, there are more incoming, and they say they may even be coming at a more rapid pace, but it's completely minuscule compared to what we were seeing back in 2019. And if you want to see what the S&P was doing in 2019, it was up 28%, even though interest rates were up here compared to where we currently are. So just because we're raising rates and shrinking the balance sheet, I am not very worried about what's going on with the stock market, right? I don't think the stock market's going to start crashing because of that. Rather, I think that we could continue to see some good movements in the stock market. If anything, I think stocks are probably going to be going up. as fears alleviate from the whole Russia Ukraine situation, as we start to see less fear around inflation, as the Fed maybe starts to address a little bit more, people are a little bit less fearful of these supply chain issues and all that that's currently messing with the market. I think, if anything, as those fears alleviate, we could actually see stock prices moving up. I'm not too worried about the Fed raising rates and shrinking the balance sheet. I think that those stories tend to be more FUD based. They don't tend to have as long term and as severe of an impact as people tend to think they do. That's just my opinion, though. It's not financial advice. It's just what I'm thinking about the markets at the moment. I am still a big bull in the stock market, right? So that's just something I want to address today, guys, because I noticed stocks were falling pretty significantly. A lot of people were getting very fearful. I just wanted to throw in my 2 cents. And obviously, feel free to let me know what you guys think down in the comments. Feel free to join the locals community, top link in the description. If anyone wants to join that, feel free. We post there almost daily. And other than that, guys, don't forget to subscribe to the channel if you appreciate this kind of content. And other than that, have a great day. I'll see you in the next one. Bye.